the pump. Always, guys, respect the pump. I respect the pump in all assets. Why? Because it's kind of like karma. You know, the power of the pump always comes back to you if you respect the pump of other people. It's crazy, but I have this belief that whatever pumps, you have to pay respect. Because otherwise, if you like, oh my God, this scam coin is pumping again, actually you are kind of rejecting the pump from your life. Maybe it's a bit out there, you know, woo-woo, but we all gotta believe in something, and I do believe in the power of the pump. It's kind of like, you know, let the pump be with you. I went to bed yesterday. I told you guys on Twitter, good night and let the pump be with you. Okay, this is how I see. It's like this force. It's like this force that is all around us. And if you are really inviting the pump into your life, it will come.
Respect the pump. This is a philosophy that every investor in crypto should have. In this video, I will explain why you should stay open-minded and explain why even if a project's fundamentals aren't the best, you can still earn great returns from it. I will go over a few cases of hated investments in multiple sectors and hopefully convince you to keep an open mind to the changing paradigms of investing going forward. I will talk about the changing metas of investing, hated investments on the stock market, and hated investments in the crypto market, and then how I incorporate hated investments into my portfolio. Think of investing like a sport. As the market changes, whether this is interest rates changing, hot sectors changing, the strategy you need to take in order to earn outsized rewards changes constantly. A great example of this is basketball. In the past, players used to shoot the ball from all over the court. Here is a shot map from 2001. Now the game has changed and people shoot more from the three-point line. Were the people who played in the past worse? No. They did what it took to win in that era of the sport. Similarly, what it takes to win in the modern day of investing is different than what it took in the past. One of the greatest investors of all time, Warren Buffett, is a perfect example of this. Warren Buffett is known for value investing, a style of investing that aims to identify companies that are trading below their fair market value. Investors purchase these stocks and wait for the market to reprice them. This was done through looking at specific ratios and fundamentals. If you want to learn more about this style of investing, read The Intelligent Investor by Benjamin Graham. This style of investing rewarded Warren Buffett and his company, Berkshire Hathaway, very nicely. They had astounding returns and became the investing royalty they are today. But the outperformance they experienced didn't last forever. The meta changed similar to basketball. Their team of investors was now getting beaten by investors who had a different strategy called growth investing. Technology investing became the new hot thing to learn how to invest in, and because of Buffett's age, he was not familiar with it, and his fund was left behind returns-wise. Investing in tech was not in his circle of competence, another concept covered in The Intelligent Investor. Warren Buffett did not adapt in time. He ended up buying Apple in 2016, which by that point was not a contrarian bet. Buffett is famously not well versed when it comes to investing in technology and often hates on new technologies.
I mean, that's a greater fool theory. That's what you're saying?
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow. And you know, it's wonderful because it does create a rising price, does create more buyers, and people think I've got to get in on this. And it's better if they don't understand it. That's the other thing about if you don't understand it, you get much more excited than if you understand it. I mean,
if he wanted to be contrarian and hark back to a time where he bought stocks that performed like crazy, he should have gone to a hated stock in the market. But what is a hated stock? A hated stock, put simply, is a stock that lots of market participants hate. Not because it does poorly, but because it goes up for an unworthy reason. This inability to pinpoint why a stock is going up makes some investors mad and thus births a hated stock. In 2019, the best example of a hated stock was Tesla. But what makes a great hated investment? A great hated investment must have a few things. It must be contrarian. It must have an unclear thesis on how it will dominate the industry it is in. It should have a charismatic leader who can generate attention for the company. This attention can be good or bad. The investment should have a big total addressable market. Think Tesla taking over the transportation sector, or Bitcoin taking over gold. And finally, of course, it must have haters. Let's apply these criteria to Tesla. Is Tesla contrarian? Yes, in a world full of cars that run on gasoline, creating a car company to revolutionize the way transportation is done is contrarian. Additionally, Tesla is integrating many things into their cars that other cars don't have, like self-driving and a list full of other technological innovations. Does Tesla have an unclear path to how it will dominate the auto industry? Back in 2019, it sure did. They had issues with self-driving, executives leaving, and much more. Lots of investors thought they should have been bankrupt and were heavily shorting the company. In 2019, it was one of the most shorted companies on the New York Stock Exchange. Did Tesla have a charismatic leader? They have Elon Musk. He attracted loads of attention, some positive and some negative. Did Tesla have a big total addressable market? Yes, they were going to take over the auto sector and then come after trucking and then come after ride-sharing services like Uber and Lyft. Did Tesla have haters? Yes. They had thousands of haters. Look at Tesla Q on Reddit or on Twitter. Now that we have established some precedent, do these types of trades exist in crypto? For sure. Crypto is also a financial market, but it is much less regulated than the stock market. It is democratized as anyone can deploy a smart contract and have a coin to trade in a matter of minutes. This means that you can buy genius projects right when they launch and make generational wealth. Or you can buy garbage right when it comes out. Crypto is a much more emotional market than traditional finance markets at the moment. Tribalism runs rampant as coins can be substituted for one another very quickly. Think about it. Should you buy the cat meme coin or the dog meme coin or maybe the chicken meme coin? Seeing that there are only a couple validated use cases at the moment for crypto, the substitution effect between coins is very high. This is because there are lots of projects aiming to fulfill the same objectives. For example, there is a whole sector of Ethereum competitors. Because of this ease of substitution between coins, one of the things that coins do is they build a community to have some sort of moat through hackathons and grants. They also raise large ecosystem funds to lure in crypto users with airdrops, which is essentially free money. And because these coins are tied to money, people get very emotional over them and heavily hate on investments that oppose theirs. Other investments doing well are a threat to their livelihood. Due to this tribalism, there are a lot of opportunities for people who put their bias to the side and are always testing out new theories about projects. Every cycle there is a new large cap coin that outperforms. Let's look at some hated investments in crypto. Let's take a look at one of the leading layer 1s. Solana. Solana is a layer 1 chain that competes with Ethereum. It has faster block times, more throughput, lower fees. In blockchain, this comes with a trade-off. Because the nodes need to be more powerful to process more transactions, the network is very centralized. Decentralization was, and still is, an important aspect for crypto investors to look out for. Solana has had a lot of problems in the past. Its DeFi system is still not doing well in terms of total value locked. Its chain would go offline for large swaths of time, and they were backed by FTX, which hurt their brand significantly and made lots of investors uninterested in buying. Additionally, their chain has poor economics, meaning that the fees generated are less than the cost to maintain the network. So if the fees don't increase, the network isn't economically feasible long-term. If they change the fees, it hurts their value proposition of fast block times and low fees. These facts mean that fundamentally at the moment, Solana does not look good to its peers. But what is easy to forget is that coins trade based on the future outlook of the project, which at this point is looking bright. Solana also has a robust community of developers building on it and brings in lots of interest from developers who are not crypto native. This flew under the radar of people who discounted this chain, including me. Investors can't be in every place at once. Solana has a lot going for it at the moment. They added features so that Solidity coding language can be used. This means that Ethereum developers can easily develop on the Solana chain. They have a Visa partnership. They have big decentralized finance protocols from Ethereum coming over and using Solana like MakerDAO. They have many decentralized physical infrastructure networks using Solana, namely Helium and HiveMapper. It is no secret that the vast majority of investors are in crypto for the profits. This angers a lot of Ethereum investors and Bitcoin investors who are more libertarian in nature, looking to decentralize the financial system. It hurts them to see a project like Solana outperform their coin. But as Ethereum and Bitcoin investors keep looking for places to earn outsized returns to Ethereum and Bitcoin, they might dabble in Solana, which will push up prices. Remember, they are hating because Solana is increasing in price at a faster pace than their investments are. If Solana can continue to perform, their future looks very bright. Now let's look at another hated coin that had their future cut short and brought the whole market down with them. The infamous Terra Luna. On paper, Terra Luna is a genius idea. Stablecoins are widely regarded as the killer app of crypto, one of the only verticals that have gained product-market fit. But unfortunately, there was no way to speculate on the expansion of stablecoins until Terra Luna. Luna allowed holders to benefit from the expansion in supply of UST. This was working great until investors realized that when stablecoins were being minted, it was great for Luna price. But when stablecoin supply is contracting and Terra are being minted, that this was bad for the price of Terra and would result in a death spiral of the coin to zero. Investors constantly attacked the UST stablecoin peg, trying to depeg the stablecoin so that people redeemed their UST for Terra, leading into a death spiral to zero. Every time this happened, the main backer of Luna, Jump Capital, would defend the peg with millions. This approach was not sustainable. Eventually, they failed to defend the peg, and Terra crashed by 99% in a matter of days. Before this, Terra was a hated coin because this scenario was heavily discussed on Twitter and on crypto podcasts. Lots of people didn't want to see this coin keep going up because the more it goes up, the more it will hurt the crypto market once it collapses. Additionally, Terra had a great reason for people to be in their stablecoin. Anchor Protocol gave depositors 20% yield on their UST. This was in 2021, so interest rates were extremely low. This brought in a lot of people who didn't have knowledge of the possible death spiral mechanism of Luna. Terra's founder Do Kwon also berated bears on Twitter, which built up the cult following of Luna further. Clueless crypto TikTokers were shilling Anchor to their followers. Luna kept going up, even with the death spiral scenario present. Even when other coins were going down because the Fed had raised rates, Luna kept marching higher, increasing the rage of the people against it. Then one day, the turkey was killed. This is why skepticism towards some coins is important, so always balance the two sides and look at your investments as rationally as possible. An easy exercise to do is to think, if I was not invested in this coin today, would I be happy to buy in at this price considering what I know? If not, then it is probably time to sell or de-risk your position. Now I will cover how I personally balance the hated coin narratives. When something isn't understood, there is an opportunity. Just because it is not understood does not mean that it is the next big thing. Maybe it is nothing. Investing in things early is an exercise in being able to make decisions without complete information. When information gets distributed widely, then the opportunity dries up. Circling back to the sports analogy, think about how badly the Golden State Warriors with Steph Curry would beat an NBA team from the 1990s. But now that everyone is updated on the optimal strategy for basketball, the games are much closer. This same thing happens with investments. When you are early, haters are a good thing for a few reasons. They broadcast the investment, getting attention on it, which is good because some of this attention will convert into buy pressure for the asset. Haters are the same as buyers of a product who are not yet convinced on the utility of it. If they are educated properly and have the brain power to process the effective investment idea, they will invest in the company and then become cheerleaders. If your investment has no haters and is a consensus trade, that means that there are not a lot of market participants who still have to be sold on the idea, which means that the upside is limited. No great investments started out great. Let's look at the biggest tech company in the world, Apple. When the iPhone first came out, it was dismissed. A party trick. There were only a few people who were able to notice what was special about Apple and put money on it. BlackBerries ruled the phone market. Here is a clip of Michael Saylor in 2012 talking about Apple in a way that makes sense to everyone now.
He said to me, Apple computer, can these guys hold their prices? Aren't they going to follow the model of the PC industry? And aren't their prices going to taper down? Their 40% margins are going to become 30 and 35 and 20. And it's another example of people just know enough to hurt themselves, right? If you go to France, and this is the benefit of seeing enough, you go to France, you see Bernardo Arnault runs a company, LVMH. They're selling handbags for $4,000, $3,000, $2,500 each. This is a device that women view as fashion, and it's 10,000 years old. And for 10,000 years, no, the prices are not lower after 10,000 years. If you actually care about this thing, how many women have $300 pair of shoes? How many have two? How many have more than two? Right? The truth of the matter is when the technology goes from being a utilitarian vocational brick that I put under my desk, no one gives a crap about that, to being a piece of clothing, right? A fashion statement, extension of your personality, a piece of jewelry. And iPhones, iPads, they're somewhere between clothing and jewelry and accessory. At that point, they can hold that price point forever. They can basically sell you another $500 device every 2 years forever, because everybody's got five, and the first billion people have got that, and the rest of the world's getting elevated up.
Back then, this was contrarian. This clip is how great investing is done. You have to turn public opinion on something. That is where the most upside is. This is now what Michael Saylor is trying to do with Bitcoin. Now, to wrap up this video, genuine curiosity is a trait I always try to maintain. It leads me into great investments sometimes. You never know when you will find a diamond in the rough. You should always be learning new things if you want to outperform in current market conditions. If you enjoyed this video, please share it with a friend. Leave a like and subscribe. If you want to see my thoughts in real time, check out my Twitter page at Daily Moon Crypto. Until next time.